there are a couple of things I figure out that when dealing with systematic trading, there are a couple of things that we need to know about that. One is knowing about the trading cost. There are different styles of trading costs. There brokerage cost, transaction cost, slippage cost. And at times when we are trading with a bigger size, right, the bigger the size we are trading, we'll be moving the market at times if you are using the market orders.
Yeah.
Remember, there are two types of order. Most of the traders use. One is a market order, another one is a limit order.
Limit order, correct.
When you put a limit order, it goes to the order book and it sits, and you provide liquidity, and there won't be any impact cost will be there. But majority of the new traders, when they are starting with the systematic trading, they usually kickstart with market order because it's the easiest one to do. But at the same time, when you are doing a market order based trading strategies, your trading strategies can be anything, but you are going to execute with market orders, there will be a impact cost or slippage cost will be there.
Yeah.
So bigger the trading size, mostly you'll be moving the market. So your cost will also increases a lot. So when it comes to systematic trading, the first thing before exploring the edge, what you need to know is what is my trading cost? What is my overall trading cost? That is the first key learning. Every trader has to do the homework. Second thing comes with the execution speed, right? You know that faster the speed, faster the edge is going to be there. And moreover, when it comes to systematic trading, from my experience, what I had seen that is like you keep your holding period as small as possible. And at the same time, you also have an execution speed. These days, automation brings a lot of execution speed over here. So faster the execution speed, lower is going to be your slippages. You are the first one to get the get the trade ahead of anybody else. So the execution speed has to be better. So if you are a human and you are punching the orders manually, probably it will take at least hardly anywhere between 1 to 3 seconds to send the order and getting a confirmation. Whereas if you are involved in some sort of an automation, maybe you can reduce your execution time as low as like kind of 100 to 200 milliseconds maximum. Anywhere between 100 to 500 milliseconds, you can reduce it. And that becomes a greater edge over a period of time. Within a single trade, you're not going to feel that, but over a period of time, you would appreciate that, yes, the system is running smooth and it is delivering me a lesser slippages over a period of time. Right. So we learned about size, we learned about the speed, we learned about the cost. The fourth most important thing is the trade monitoring. Like some people, they think I am going to do systematic trading, I'm going to automate, and I'm going to go to the sun and enjoy it. It is not like that, right? So there's one more important process is called trade monitoring. See, if you are automating, we automate only to reduce our screen time in the markets. There are many traders who are part-time traders who cannot engage in the markets on a regular basis, right? I'm a full-time trader. I can sit in the screen all the day and I can watch the market. If something is going wrong, I can take an action on behalf of that. But think about the people who are very, who have sometimes there'll be a meeting to them. They might be in a very the most important position to handle their work operations, or they are kind of a part-time trader to the markets. So those kind of people, they cannot completely ignore the markets, but once in a while they have to monitor the system to ensure that everything is running fine. All the systems are running in a proper mode. Operations are running smooth. Probably I would say like at least 3 times in a day. Probably morning you need to have some routine checks, and afternoon some routine checks, and end of the day ensure that what are the signals happened, the trade also had executed simultaneously. So when all these things are in a proper mode, right, when you do that basic groundwork study, most of the unwanted things in systematic trading can be eliminated. And that is very much required for a systematic trader.
Sure.
And doing systematic trading will not completely remove your emotions, but it will drastically bring down your emotions, right? So still emotions will be there because still the human is watching the screen, and at times then there might be a strong positive emotions will be coming in, a strong negative sentiment will be going on in the markets, and signal will be going reversal. And at times humans will be having the hands to go and stop the system. That is the primary thing. What a trader should not do that. The main purpose of the trading system itself, right? So allow the system to trade as a system. We start interfering with the system. We degrade the performance of the system most of the time than we are going to make it better. Right. So at a beginner level, the trader should stay away from touching the system, changing the time frame during the market hours. So all those things people will do when when things are going fine, when systems are running fine, it is generating profits. People are really happy about that. They don't touch the system most of the time. There are times when a system is giving extraordinary profits or some sequence of losses. I had seen personally, I had seen a lot of traders, they started changing their systems, they're changing their approaches, they start mixing other indicators. Now, once you design the system and you want to continue with that, you need to have a solid rules when you will change the system, when you will step away from the system. Everything has to be pre-decided before jumping into that, right? As I said, systems are mostly, when you are running a system, you are running a business, right? A system, a business, how they make money. They identify a process, they keep on doing it over and over, and over a period of time, they keep on repeating it, and that's how they generate money, right? You get into any big business, they have a process, they follow the process, and they end up making money, right? The loss is also part of the game here. It is not like just because you are running a system, you will be always ending up in profitability. That is, you should not see trading system as a money-making machine, but you should see trading system as your business. And when you are running a business, you know how you should run it. And understanding the cost, understanding the competition, these are the two primary things when you are getting into the systematic trading.
Sure.